We're here at springtime. He sets. He winds. This is the IssuesWatch podcast. Hello, and welcome to the IssuesWatch podcast. I'm Brad Muniz, your host for the bi-weekly accounting and auditing episodes. I'm an assurance principal at Clifton Larson Allen. And back with me today is Frank Boudelet, an emeritus partner at Witham, and my co-presenter for Society Law and Ethics, and from what I saw, a very good right-hander, too.
Yeah, I used to pitch in high school, man.
Very, very impressive.
Thank you.
This episode qualifies for Nano CPE credit. If you're interested in earning CPE credit for this episode, hit the pause button now and head over to njcpa.org/nano to find out how. Quick disclaimer, the views and statements expressed herein are our own and not necessarily those of NJCPA, CLA, or Witham. Okay, I don't know if people are going to be upset with this topic. This is a really interesting topic, but I know they're going to be upset with your hat. But we'll let it go at that for right now. Is that for Brad or Boudelet?
It's for, maybe you should warn us. It's Brad. No, it's,
Okay, there we go.
Boston. Come on.
Okay.
Ellen McSherry would love the hat.
Yes, yes. All right, so today you came up with a really interesting topic, and I've seen this a lot of times where people don't think about this at all. And you had a good analogy about this.
So Brad, it's like the audit of historical financial statements. That's like your ace pitcher, right? Mm-hmm. You got the ace that starts. Everybody wants him to get as far as he can into the game. But there's other specialists that help you get to close the game out and win the game that people might not know about, right? You got your middle reliever, and then you got your closer. Well, here's something. The attest standards can be your specialists that come in to help you close out an issue that you have with a client or a question that they have. So the attest standards, there are several of them. Those are in the AT section. So ATC 205 is examinations. Then we have AT 210 is reviews. So those are test standard reviews, not the reviews of historical financial statements. Then you have 215 is AUPs. 305 deals with prospective financial information. 310 deals with reporting on pro forma information. And then we have 315 is compliance to test standards. And then 320 deals with reporting on examination of controls at service organizations relevant to an entity's internal control of financial reporting. Whew, that's a lot.
That's a lot.
So that's your arsenal that you can use to close out the game. So let's talk a little about some of these.
And I just want to point out
Sure.
that you kept saying AT,
Right.
which is attest.
Attest.
AU is audit,
Right.
and AR is accounting and review.
Correct.
Okay, just wanted to make sure
yes,
people were picked up on
Yeah,
that.
so hopefully they know where to find those because there's a lot of good information here. So let's talk about the purpose of an examination or review at test engagement. It's to provide users information with an opinion or conclusion. The opinion would be for the examination, the conclusion would be in a review, regarding the underlying subject matter as measured or evaluated against a suitable criteria. And we're going to talk about some examples a little bit. Just want to go through some of the definitions. An examination is analogous to an audit, right? Where you have historical financial statements where you're giving a level of assurance about the conformity of the subject matter that it's correct or it's materially correct. An attest review is similar to a review of historical financial statements where you're given limited assurance or negative assurance about the criteria.
Right.
So those are the two, examination and reviews. Then we have purpose of an agreed upon procedure, AUPs, right? So that's to enhance the user's confidence in the subject matter by providing findings for procedures performed by the practitioner on underlying subject matter. So that's where you're giving, you're performing certain procedures and you're saying what the findings are.
So by its name, you're performing certain agreed upon procedures.
Yes.
And the key to it, you said it twice now, the key to it is that you're providing your findings based on those procedures that you perform. We're going to give more examples later on.
Give more examples of when you would use that. Yes.
And now your firm, and when we were at Sobelco, we used to do agreed upon procedures for the grants, for the GROW project.
Right.
And it was great when we couldn't get people to agree upon the procedures that we needed to perform, but they kept telling us to perform procedures that we couldn't perform. But
Correct.
We'll talk about that more
later. Yeah. That's a whole other section that I was hoping to forget about in my life, but thank you. Prospective financial statements, that's looking into the future, right? So you have a financial forecast and you have financial projections. So those, again, you're taking some information, you're making assumptions, and you're taking those assumptions and looking to the future to see how they are and how closely the entity can, or the criteria behind it so the entity can meet those assumptions.
Yeah, I don't know if you're going to talk about it now or later, but there's a key difference between a forecast and a projection.
Okay.
Right?
What is that?
Well, I thought you were going to phrase it as what would happen.
Right.
The projection is based on a specific event happening. So if this transaction occurred, this is what we anticipate to happen.
Right.
A forecast, in my mind, and tell me if you think it's different, similar to a budget, but you see we hadn't mentioned budget here, but a forecast is saying here's what we think is going to happen for a remainder of a period or for a certain period of
Right.
time. Whereas a projection is if this event happens, here's what we anticipate is going to happen.
Yeah, I agree with you. I agree with that. That's exactly what it is. So,
But
and those are they're useful. I mean, I've done a lot of forecasts in my day and projections, and the difference is they're kind of muddied a little bit. What's the difference? But the key to those is that the assumptions. You got to make sure that you have good assumptions, and a lot of times I've done a lot of projections, and I've never seen any of the assumptions come true.
No.
So you don't give any reliance on them, right?
Yeah, I think I heard
Or
that somewhere.
assurance.
That I think we're precluded from asserting that the forecast is going to happen.
Yes,
right?
yes.
I think I heard that.
That's
maybe
in
like
ethics.
There we
if
go,
you've taken our ethics course, you've heard that, right?
That's where I heard it.
Then we have pro forma financial information. So that's a presentation that shows what the significant effects on historical information might have been had a transaction consummated.
Right.
So again, you're taking your historical numbers and saying, hey, if we have this entry or this transaction occurs, this is what it would look like. So that's your pro forma information. So let's talk about some examples of examinations. So you might want to measure return. The one that I've done a lot, because I've dealt with hedge funds and private equity, dealt with the returns on investment. And we've done examinations there where we give an opinion on whether those returns that they have had historically are correct. So you're almost taking a piece of a financial statement and just reporting on that. Okay, so I've done that. Another one that I wasn't sure, and in the standards they have these examples, which is great. And I like this one. Evaluate a daycare center's safety practices during the year and the implementation of those practices. So basically you're taking this set of criteria, and you're saying here's what the entity did, matched against the criteria. Did they put all the safety requirements in place? And you can opine on that. Yeah, which was interesting.
What I find a very gray line sometimes is it slipping into an AUP or is it slipping into an examination?
Correct.
The examination is tougher because you've got to assess risk. It's very similar to an audit, but it's pretty much auditing, and this is me paraphrasing, you're auditing a specific element, a specific issue.
Exactly. Because another example would be number of widgets sold to XYZ company.
Right.
Or number of, they talk about tons of coal mined. So you can actually do an AUP. So you're taking like a piece of a financial data and you're giving it an audit opinion on it. So the reporting would be like, we have examined the accompanying schedule of investment returns. And then the opinion paragraph would say, in our opinion, the schedule of investment returns for the year ended December 31st or the schedule of investments referred to above is presented in accordance with the criteria, whatever criteria it is. And that's typically given in note 1. So you're kind of giving an opinion on what it is.
Exactly.
A review is more, you can, same thing. The one I only see there is like you're taking the measure of returns. Again, you're taking returns, but you're not giving the assurance, you're giving limited assurance on that. And then we get into AUPs. I know you've done a lot of AUPs. You mentioned before something that made me keep going like this. So an example of AUP, when an inspection of specified documents, evidence in return at certain types of transactions or detailed attributes thereof, confirmation of specific information with third parties. So yeah, you can actually confirm accounts receivable. And that's an example I have here. You can do performance of specific procedures on work performed by others, performance of mathematical computations. So AUPs are really, you're performing a procedure, and then you're saying, were there any findings? So one example here was accounts receivable. I thought this was pretty good because a lot of times people are saying, well, the client doesn't need a full audited financial statement. They really care about, are receivables correct? Right? They want to make sure. So an example here is we obtained the accounts receivable age trial balance, We mathematically checked that the individual customer account balance totals in the age trial balance of accounts receivable agreed with the total receivables per the age trial balance. We compared the accounts receivable per the aging and the accounts per general ledger account number 250. And then what we say is, we found no exceptions as a result of the procedures performed. That is the proper way to do an AUP.
Right, you can't just say no exception, no.
Right.
One I found interesting, I was talking with a practitioner in Alaska one time.
Okay.
Yep. And one of the 50 states, though.
It's a jurisdiction, too,
Yes.
right? Okay.
And what they said is they dealt with a lot of nonprofits,
Right.
but they felt bad that the nonprofits had to spend so much for the audits, so they offered them opportunity to do a compilation. Doesn't satisfy an audit, by the way, but they did a compilation.
Right.
And I had this with a client too, where we did a review instead, and they get agreed upon procedures to satisfy what the board was looking for them to focus on.
Right.
Rather than them auditing prepaid insurance.
Sure.
Who cares about it?
Agreed.
You know, confirming cash flows is important, but you know, focus on the areas that the board finds important and do agreed upon procedures.
Agreed.
And we did that one time where we did a review only, and the bank was only cared about the receivables.
Right.
So we we actually did procedures that you said here.
And the next procedure, which I just want to read this one because I think this is really on point of what AUPs are. We selected 50 customer accounts from Exhibit A by starting at the 8th item and selected every 15th. Again, agreed upon. You can't just pick the ones you want. So you have a methodology here because, again, you want to make sure that you didn't just skew the information. So every 15th one thereafter, until 50 were selected, the sample size represented 9.8% of the aggregate receivables. We obtained corresponding invoices from the company and traced the aging for the 50 customer accounts shown in Exhibit A to the details on the outstanding invoices in the receivables. We found no exceptions as a result of these procedures. So the important part of that example was that you can, the agreed upon procedures say, well, test my receivables. Well, you can't. You got to tell, how am I going to do that? So I start with the 8th one, I pick every 15th one, and I can pick 50.
Right.
Then anybody can perform that procedure rather than me just haphazardly picking information. And then some other things on AUPs, some acceptable actions. So you can inspect, you can confirm, you can compare, you can agree, you can trace. You can inquire, you can recalculate, you can observe and mathematically check. But you can't. These are things that you want to stay away from. You can't note, you can't review, you can't general review, you can't limit review, you can't evaluate, you can't analyze, you can't test, you can't check. Those are words to stay away from. So you can't say I tested this. What does test mean? It's too vague. So those are the things for AUP. So
wait, I like the last one that you can't do.
verify and examine.
Examine.
Can't
Why?
examine.
If you're examining, now you're doing audit procedures.
Exactly.
Yep. So SSAE 19 came out a few years ago, and it has this list, and it has some really, really good examples in there. I'd recommend people look at that.
I think so. This is a great arsenal for you to enhance the services you perform for your clients.
Yes, especially when you blow your arm out like Frank did with that throw before. Oh. Okay. In closing, I've got a few upcoming NJCPA events to let you know about. On May 9th, in person in Haddonfield, the Southwest chapter is holding a nonprofit update. That sounds very interesting, by the way. Frank and I will be presenting a 3-hour A&A update webinar on May 10th, and we'll replay on May 17th.
That sounds more
even more
interesting.
And the Society's annual audits of employee benefit plans conference will take place virtually on May 16th. Get information for these events and more at njcpa.org/events. And of course, be sure to join the Society's Accounting Auditing Standards Interest Group. Sign up for free at njcpa.org/groups. Frank, thank you for joining.
Glad to be
and
here.
throwing that wonderful pitch. Thank you for watching or listening.